All right, guys, welcome to the podcast today at Ask a CPA. I've got Brett here with me. My name is Russell, and we're here to talk to you about how to save some taxes. So if you haven't stumbled across our website so far, askacpa.co, that's where you can go and submit some questions to us, or on YouTube in the comments, and we read through those and we use those questions to answer them here live in on the studio. So, Brett, want to talk about saving some taxes today, so maybe we should just jump right in and take the first one.
Absolutely. Thanks for doing this, Russell. I'm excited to be here. And yeah, we got a really good question from Noah in Nashville, Tennessee. Noah asked, "What financial statements should I be reviewing regularly as a small business owner?" That's a that's a pretty, really need to know the industry in which you're working in. Each industry, there's kind of different KPIs or key performance indicators that we look at to kind of track internally for each business. But normally when we send a set of financial statements, we send a balance sheet, which is your assets, your liabilities, and your equity, and a income statement or a P&L, which is your income and less all of your expenses to get to your net income. And then we send a statement of cash flows, which has where the flow of funds are coming from and where they're going out to. So those are kind of the three main financial statements of any company. So if you were to go online for any publicly traded company and look at their financial statements, that's what you're going to see: a balance sheet, an income statement, and a statement of cash flows. Some other financial statements that we look at internally would be your accounts receivable, your aging AR. So you kind of know if you're sending invoices and waiting for customers to pay you, whether you're on terms of 15, 30, 45, 90, whatever your term dates are. It'll show you how old your AR is and how much people owe you money, and how long those invoices have been outstanding for. So that's definitely something that we track internally as a CPA firm. We're sending out invoices, we're waiting to get paid. So we like to track our AR and kind of know what our total amount is, how much people owe us money, and how old that's getting, if we need to follow up with people, or if those invoices need to be resent, or we need to send paper invoices or something. So yeah, those are the main financial statements I look at. For the income statement, like to look at it on a monthly basis. So you can, we use QuickBooks Online for almost all of our accounting clients, and we'll run the P&L out on a monthly basis. So you can kind of see trends. You can see if income is going up, or if it's a seasonal business, if it's going up and down, or what expenses are hitting in which period. Sometimes you pay like a big insurance or a big software cost in a certain period, and it really, impacts that month's P&L. So those are some of the things that we look at as a business owner, and working with clients as well. Those are some of the normal financial statements that we look at and review with our clients. What do you see over in your firm, Russell?
Yeah, so you mentioned the big three financial statements, and that's right. And but maybe talking about maybe some KPIs, I think that you have operational KPIs and financial KPIs. And so operational KPIs, that's really business specific, and even financial KPIs are pretty business specific too. Which ones are best for you? But one of
So
the
you
things I
were
like to,
you were a CFO of a dental organization where you guys own a bunch of dental practices. What were some of the main KPIs that you looked at for that business specifically?
yeah, so there, we had operational KPIs. We had things like number of visits per day per office. We had things like how many visits were on the schedule going out seven per day, going out 7 days, right? So we wanted to make sure we had visits, and then we also had confirmed visits. So we had scheduled and then confirmed. You wanted, the closer you got, you wanted more confirmed visits to make sure that your schedule, those people were actually coming in. You set an appointment with a dental office, 6 months, a year out, that sort of thing. A lot of people
Yeah.
forget, so we want to make sure we're making those phone calls. those are kind of some examples of operational ones. But when we talk about financial KPIs, one of the things that in a services business, payroll is your biggest expense, right? So a big one that we looked at was payroll as a percentage of revenue over time, right? So we wanted to see what our payroll cost was per month as a percentage of our revenue. Then we also looked at that trending over time, making sure it was going in the right direction. One of the things that you want to think about when you're looking at KPIs is that all numbers are relative, and if you're just looking at net income and a snapshot, right? If you say, well, I made $1 million last year, it sounds really great. Most people would love to make $1 million, but if you made $10 million a year before, maybe making $1 million this year wasn't so good. And so all numbers are relative. You want to keep that in mind. And so you want to make sure, like you said, look at these on a monthly trending basis. I like LTM, so lagging 12 months. So you're always looking at a 12-month set. That way, if your business is seasonal, like you mentioned, right, if it's going up and down, you can kind of better see that seasonality and the effects of that seasonality, because you're always looking at 12 full months and even though you're not in a calendar year, right? So payroll is a percentage of revenue. COGS or costs.
What kind of metrics do you look for there? I mean, when we're thinking, we work with a lot of service businesses. There's probably a lot of service businesses listening to this. What percentage? I know for like a general service business, what percentage do you think your salary cost should be of your total revenue?
So if you're excluding owners, right, I think you got to, especially small businesses, you got to exclude owners because different businesses pay owners differently. And sometimes it's not always like a fair market value for the owner, that sort of thing. There's some other implications involved. So got to exclude owners. But then outside of that, I'm looking at somewhere between, 25 and 35%, depending on the type of business. A rule of thumb that works kind of in the CPA world, works in a lot of professional businesses, is a third, a third, a third. So you got a third in payroll, a third in overhead, which is like rent, utilities, software, and then a third to the owners, right? And so most businesses, if you just start with that, a third, a third, a third thought, and then kind of adjust it based on your particular business, maybe your kind of growth pattern. So there may be a time where, as an owner, you're not making a third because you're reinvesting a lot into marketing or you're hiring people. And so one KPI not being the perfect number, kind of in a general sense, it doesn't really matter as long as you've got a really good reason. One, that the KPI is not fitting that box right, but then two, you've got a good reason for it. And so it's not necessarily, again, all numbers are relative, right? So this number being right or wrong isn't really the answer. It's what is the number and why is it that way, and kind of having an understanding and a plan behind it. I think that's the thing that a lot of people miss when they look at KPIs. They want a fancy dashboard with charts and line graphs and all of that stuff, and I can make those. I've made those in the past. When I was the CFO, we had a fancy software that we developed in order to do that for us. But owning the CPA firm, I just use Excel, right? So I just have like a list of things that I have an admin type a bunch of stuff in, and then she sends it to me, and then I look at it, and these are kind of my KPIs that I look at the firm. And so it doesn't have to be fancy. I would actually advise, try to start off as low tech as possible, and that way you can see what works and then what doesn't, and what's important and what's not, and then kind of refine that. And then once you've got that refined, you got a good feel for it, that's when you start bringing in the kind of the fancy technology, make it look pretty, that sort of thing.
Yeah, I mean, I still probably run the same 3 reports every day. I want to see what our billings have been for the month. I want to see what our expenses that are coming up. I want to see who owes us money. Just kind of the normal things. I want to see who's billing, who's gotten work out the door, who hasn't. Who do I need to go pump up? And see. Just kind of the same things. And once you get used to that, you kind of know what to look for within those reports to kind of determine what adjustments need to be made within the business in order to maximize profitability.
Yeah. Do you keep it low tech, or do you do something fancy?
No, it's all low tech. It's all just in QuickBooks. We just run reports out of QuickBooks because then it's instantaneous. I know everything's up to date, and their reports are pretty good.
Yeah. Yeah, it's one of those things, right? They're good enough, right? So you're going to spend a lot of time and money investing in something that you can still just get the information, for literally no extra cost and like 15 minutes of
Right.
reports, running
Right.
some reports. But
Yep.
well, we also got a question here from Harper in Houston. What is the best way to handle payroll taxes? And is there a software that you prefer? So do y'all do
Mhm.
payroll taxes at your firm, Brett?
We don't. Nope. We don't do them internally. So we have referral partners that we work with, preferred vendors type thing that we work with, but we don't do them in house. Some of these software companies are just so big and they're so good. I mean, that's all they do.
Yeah.
Doing it, we can't do them any better. And then I can't go on long vacations because I have to be there
Run payroll.
running payroll for these companies. So I don't want to do
Yeah.
that. There's just not a lot of value that I can add by running payroll for a company. I can't do it better than any of these, preferred payroll companies. How about you guys? Do you run it in house?
No, we use some vendors as well. When I was working as a CFO, I messed up. It was totally my fault, and we missed payroll one time. It was going to actually run like a day late, we discovered the error. It was like a banking holiday issue, and so we discovered the error, and so then we're like, okay, well, it's just the next day, like people probably aren't even going to notice, right? So I didn't send anything out or anything like that, and man, it's like 6:30 in the
Everybody
morning.
noticed.
Oh yeah, it was on Teams, the chat software we were using. So Teams, and some people had my phone number, and so they were calling and texting me. And man, it was a wake up call, right? And that was a good lesson to never run payroll. But you're
Yeah.
right; these software companies they do it so good and so cheap. Let's say you've got 3 employees. The one that we recommend a lot. That's going to cost you, I don't know, $65 a month, right? And they're going to file 9 tax returns for the year, plus your 1099s, your W-2s and W-3s, and they're going to pull the money out of your business account and pay and remit all the taxes to the state and then to the federal government, and then direct deposit that into your account and the employee's account, right? And they're going to
Hmm.
do that for $65 and a month. And there's just no way that a CPA firm is going to be able to do it better than they can. And
Right.
so
So what are
I
what are some
highly
of the
recommend.
softwares that people use? I know there's we usually use ADP, which
Mm-hmm.
is a big, probably the largest
They've
payroll
got to be the
provider
largest,
in the
yeah.
country. They're great, and we have like a person that we contact, we connect our clients with. She's awesome. She'll get them all set up and squared away, and it's really more the clients that want a little more hands on. They want you to kind of help them get set up, or they have multiple states, and there's a little more issues, and they're going to be a little more expensive than some of these kind of like do it yourself softwares. Like Gusto is the other one that we work with as well, and they have a representative as well that we can put them in contact with, but it's a little more kind of DIY than
Mm-hmm.
ADP. Though ADP's a little more hands on, a little bit more. Um, they just help you a little bit more along the way rather than kind of doing it yourself through Gusto. So if you have zero experience doing payroll, I'd probably go with a bigger company like ADP. There's also like Paychex, what are some other ones? Where I'm going
Paylocity,
drawing a blank.
Paycor,
Paylocity, that's what I'm
Sure
trying to use.
Payroll,
Yeah,
Patriot Payroll. I saw recently. I mean, there's a half a dozen of them out there that are really large companies.
right.
Some of them even publicly traded companies, that sort of thing. They're pretty large. But we recommend Gusto too. That's the one that it's a platform fee. It's a monthly fee per employee or a contractor. They'll do those contractors as well. And it's just pretty inexpensive to do. Well, we finally came down to if you're a bigger company, multi-state, and all of that, then there may be a need for if you have too many employees, it can be a little bit difficult to input all that information into Gusto. But uh, if you're a really big company, then sure, ADP, those kinds of things are more helpful. Like you said, they help you a little bit more. But what we found is that we referred enough people to Gusto that all of our clients now get like a higher level of support, those kinds of things, which is one
Mm,
of the
yeah.
benefits of kind of narrowing it down to kind of just one or two different vendors. Like you said, like there's a person, right?
Right.
Evan. Yeah, like I can just call Evan and be like, hey, I've got a problem. I need you to solve it.
Yeah.
And
Right.
he wants me to because we help him meet his bonus every year, right? That sort of thing. So,
That's right.
uh, that's nice. But they just do it better than you could ever do it on your own. And when it comes to like a two three employee S corp, that sort of thing, they even put the payroll on autopilot, so you don't even have to think about it, which I like
Hmm.
a lot. I It's an administrative task, and if you're a small business owner, you're bootstrapping a business trying to get it up and going. The last thing you want to do is do what I did and forget to pay your employees or miss it because it's like a bank holiday, right?
Yeah.
That's not gonna make your employees extra happy at you. That's for sure.
Right. Right. Yep. And then you can go the other way as well. Like if you want even more hands-on, if you're a bigger company, probably 50 more employees, and you're wanting some HR, you're wanting some employee handbooks, you're wanting more benefits. You could go with something like an Insperity. Our buddy Mike works over there, and
The PEO option.
yep, and they'll help you with your health insurance. They'll help you with retirement accounts. They'll help you, with all of your HR issues, hiring, firing, employee handbooks, all that stuff. It's probably better for maybe 20 plus employees. You have
Mm-hmm.
some complexities. Yeah, Mike's great. So we'll put his contact information in the show notes. So if you want to reach out to him, as well, yeah, I'd recommend them as well.
Yeah, and so that's interesting. You bring up the PEO concept, right? So if you've got some people may not know what that is, but essentially, what happens is you pay a PEO company a fee, and then the W-2 comes from that PEO. It doesn't even come from your company. So it's a great
Right.
way for like some of the HR litigation mitigation stuff, and some of the risk mitigation, and then like you said, if you have enough employees, or you really need to offer like a pretty robust benefits package, but you're still not big enough to get some of the bigger discounts and breaks because of the pooling and all of those things that come involved there. They're a really great option. And if you're just growing really fast and you're kind of at that 20 employee level and you're going to grow really fast, it's a great option because it just takes a lot of that off of your plate, and it's much cheaper than trying to hire like some sort of HR professional to
Right.
come in there, right? Um, what I
Yeah,
see a lot of
HR
companies,
professionals are really expensive. I mean, that's a
yeah,
really, yeah. I mean, you're getting into the hundred, six figures plus, and probably a couple hundred for a
yeah.
really good HR professional with a lot of experience.
Well, when I see what small companies do is they too early they jump out and hire that HR professional, and or even jump out too early and hire that CFO, and instead of outsourcing to a CPA firm or an Insperity for like the HR stuff, and they jump out and they try to hire that person, but they can't really afford a person with enough experience to give them
Right.
like good advice and justify the money that they're paying, and so they end up hiring way down on that kind of skill ladder, and it's really just becomes kind of a waste of money, right? Because
Right.
they could have paid less money and got better quality advice, even though it may seem expensive to outsource. It can really be a cost savings because you're not going to overpay for someone who's going to just massively underdeliver on experience.
Right. Exactly. Yep. Well, cool. Well, Russell, this was a great episode, man. That was some really good questions. Who'd we hit? We hit Noah from Nashville with his financial statements question, and then Harper from Houston, how to handle payroll taxes. Those are some good ones, and if they submitted their questions through our website, it's askacpa.co. If you have a question, whether it's tax, accounting, finance, we're not financial advisors, but we're pretty sharp. We can
Pretty
dig
sharp.
in. We'll give you some advice. Maybe not investment advice, but
Yeah, I'm
we'll,
not going
we'll
to tell you
point you in
which
the right
Bitcoin
direction.
or crypto coin to buy next, but we can give you some advice.
Yeah, exactly. Well, cool. Well, everyone, we appreciate you listening or watching on YouTube. If you are on YouTube, make sure to hit that subscribe button. If you're on one of the podcast platforms, hit that subscribe button as well, and leave us a review if you're liking this content. If you're not liking it, don't leave us a review. But yeah, we appreciate everyone listening, and we'll catch you on the next episode of Ask a CPA podcast.
All right. Sounds great. Talk to you soon, Brett.
Thanks.